In today's episode, we are going to talk about crypto assets reporting framework, why it's important, who introduced it, and how it affects different businesses. We are going to have a live discussion with Agnieszka Hołownia-Niedzielska.
Hello.
Agnieszka is my colleague, and we've been working together for a couple of years. Aga is a senior solutions consultant at Espeo, and in our company, we have companies to build fintech and blockchain solutions. Why was CARF introduced, and who did it?
Well, it's introduced by the OECD, and with that, we can say that CARF is, it's all about the money. But the idea is to gather information about transactions that haven't been reported so far. The idea is to be able to recognize and tax the investments that so far has been somehow slipping off the tax authorities field and area. Because in TradFi, we've got some intermediaries, and for example, the area of jurisdiction is much more simple than now.
Some people in Europe, they call CARF DAC8. Is that correct?
Mostly so. DAC8 is the 8th amendment of the EU directive that's connected to the cooperation and data exchange. And this amendment states about porting crypto assets, digital assets. So in this case, that's very similar to the CARF, but there are some differences because, for example, when we are talking about CARF and CARF terminology, that's not what we can find in DAC8. There we will find terminology that's alongside MiCA that we have in EU. So all in all, these are very close, but not exactly the same. And DAC8 goes even, let's say, broader, because, for example, there are some additional penalties. Let's say that you are a user that's supposed to provide some additional data for the CASP, so crypto asset service provider. That's, for example, you have your account there, and you fail to do it. So there are ways in DAC8 to actually block your transaction. So there are, I would say that for the sake of discussion, the topics are very near because we are talking about reporting in information that are connected to the tax and tax obligations. So
regular people, they will have any new obligations regarding the tax payments or reporting of their payments? No, that obligation is put on the reporting entities. So actually, fintechs, banks are clearly stating CARPs or RCASPs because these are reporting crypto assets services providers or crypto asset services providers. For sure, they are required to annually send an XML report with the data, with the transaction data to their domestic authorities. And then those authorities will exchange this information with other systems, and it will be international exchange, so that actually everyone who has multiple tax residencies or one tax residency, but also some investments outside of their main country will be, let's say, reported, and their tax reports will be easier to verify. So the result is that something might change for the traders because for now, some of the users, for example, provided a wallet of the ID and up to that the email, and that was enough to start working, exchanging money, wrapping crypto, etc. And now we need to, the crypto assets service provider will need to report for this transaction, for example, address or tax identity number of this person. So this person will be asked to fill in this data. So generally, there is no obligation for the end users to provide, like we, as a users, do not need to report anything, let's say yearly, but the organization that will need to do it can ask us for some additional information. But if you are a crypto trader and you already were verified, you were kind of
KYC'd by your provider, you don't have to do anything with that regulations.
Exactly. CARF is something new. The first reporting period starts 1st January of 2026. The reporting will take place in 2027, but it's very important to remember you won't report in 2027 something you didn't actually, information that you didn't actually get and store in 2026. So that's why this 1st January of 2026 is crucial. Also, the timeline is different because most countries, I believe there is 52 of them, start with the reporting, with the CARF reporting from the 1st of January, but there are also January 2026. But there are some that will start with 2027. Exactly. Let's make it a bit simple. When we are talking about CRS, we are talking about actually reporting account by account and this balance of this account. When we are talking about CARF, on the other hand, what we are reporting transaction by transaction. Exactly, about the digital assets. Also the scope of the data. But that's very important to remember. Neither CRS nor FATCA will be removed or withheld. We still have those obligations, and that's another one on top of that.
So every single deployment of the tool will be conducted in line with the internal regulations of the institution. So let's talk now about the technical side of the reporting. All in all, it's just about XMLs, isn't it?
Yeah, it is, but still the devil is in the detail because it's an XML reporting, meaning that we've got the schema published. That means that there is an XSD schema, and when the XML report is produced by the filing entity, they need to validate it against this schema, and that's the
biggest kind of challenge. So is it the case that each country can have slightly different requirements regarding the reports that they want to obtain?
Yeah, that's true. There's one XSD schema, but that's not everything because each and every domestic tax authority will adapt it. Each country adapts it a little bit to their own needs, to their own systems. For example, maximum size of the file data can differ. Also, the way the report needs to be signed or the way it needs to be reported up to the way how and where this reporting entity should put it to send it to the local authority. First of all, I would say that there is a need for preparing the data, processing the data. So being aware of what kind of data we are, if any of this if any of this information needs to be provided, needs to be filled in. Just like I mentioned, XML validation. It's a huge topic because it needs to be done it needs to be done well, meaning the validation report is something very important because one thing is being able to tell that, my data isn't accurate. The other thing will be actually being able to tell what's wrong with this data. Just like we said, there is, some of the reports can be quite big.
Is there anything specific just because the crypto transactions are going to be reported?
Yeah. However, with this standard, we are talking about new reports, so new challenges. One of this is multi-jurisdiction. For example, this has two aspects. One is that we need to be able to identify customers or clients, because also some businesses will be reported, to tell if they are, what are their nexuses, what are the places of business. And the other is that if the reporting organization have different branches, then they need to be aware of those differences that you just mentioned, that I mentioned. So data validation, because the tool that we've built, it's ready to use tool, a simple plugin that can be added into institutions' infrastructure, no matter if it's on-premise or cloud infrastructure. All of that. Whatever we can add this plugin. And what this plugin does is actually takes data, provides XML file, and validates it. Validates it against all of the against XSD schema. Talking about structure of the file, dependencies that are there defined, and format itself, like from the technical perspective. So that's something that our CARF tool in the core version can do.
How we are going to make sure that the entire process is successful for the institution, and they will be ready 1st of January with the reporting?
Yeah, that's a good question. Our goal is to be a one-stop shop for the need. And in this case, here we have a partner, fintechs. That's the company that can take care of entire compliance assurance. So we do what we do best. Mm-hmm. We are best in the technology and this area. And we have partner that's best in compliance assurance. So we do it together.
Where our viewers can find more information about that tool?
Of course, at our website at espeo.eu/CARF. So it's very simple to understand for sure. It's also worth mentioning that this tool we built together with the fintechs company, and they offer service that help data overseen, making sure that data are compliant from this very formal point of view.
Okay, so let's imagine that a company wants to invest in such a tool. So what they will gain in return for their investment?
First of all, less of a headache. Yeah, that's the big thing. Definitely a solution that's installed inside the organization. That's really important, because if we are adding something to the internal infrastructure with this tool, there is no data going out or in. Everything is processed inside the organization. So that's really important, because it's easier to implement from the perspective of internal policies of data processing, because we are talking about data about the clients and their transactions. We are talking about buys, pays. I believe there are also payments and transfers to be reported. So all of those are really sensitive information. Mm-hmm. And here they stay exactly in the organization, in the bank or fintech. We've got automated process. If it's automated, that it is repetitive, and if it's repetitive, it can be audited. And the holy grail of this also the validation. Yeah, I mentioned validation a lot, but that's really how we know if the report is proper, is the data is accurate, and what needs to be changed in the data feed to actually meet all of the requirements.
So what's your view on the pace of innovations with regards to the new regulations like CARF?
Well, no one likes reporting, and we can say, and at the first glance, you may say that, well, it stops innovation, but it's actually not true. Our report on the state of the DLT presents information that most of the responders are eager to have regulations because they give them clarity. Mm-hmm. So with those, CARF is yet another step in clarity, in transparent verification, in transparent taxation. So I think that that it won't stop innovation. It will help it grow.
And it also is going to facilitate the adoption of the
it's
digital
possible.
Assets, right?
It's possible, because now everyone will feel a bit safer.
Mm-hmm. Thank you, Agnieszka, for all the information that you shared. As you know, as you may now know, compliance is not only about XML files, but it's also about the processes, security, policies, safe deployment. So all these aspects need to be taken into account when you try to be compliant with the new regulations. Today we are going to finish to leave you with that information, with that knowledge. If you have any questions, please post the questions under the video, and we'll get back to you with the answers.